Hi guys, welcome back. This is a fabulous looking market that we have on our screen. In fact, now just getting better. The Sensex is up almost 400 points. So looking much better than the screen yesterday. But let's do one thing. Let's talk about Sterlite Technology. It clearly is riding the data boom with a very strong third quarter led by revenue growth. The margins too put up a robust front, coming in at a 12-quarter high. Anand Agarwal, the CEO of Sterlite Technology, joins us now to talk about that. Anand, thanks so much for joining us on the show. I want to start by talking about your margins at 22%. This is the best we've seen in a long time. What led to this, and what could be the triggers to sustain these margins in the second half of the year or for the rest of the fiscal?
Good morning. Thank you for having me. The margins essentially have been going up on account of very good capacity utilization that we are seeing, especially on the optical fiber business. And that's also combined with the fact that we are selling more newer, higher technology value-added products. It's largely a combination of that. Other than that, we have a much higher visibility in terms of our order book. So that creates better clarity in terms of operating leverage, in terms of the overall supply chain. And that all that adds up to some points in the overall efficiencies and the margins.
Okay. Morning, Anand. Your numbers have a striking consistency. We are speaking of low base because of demonetization for some sectors. But in your case, the 9-month is showing that, there is a striking consistency. Revenue up 25% for 9 months, EBITDA up almost 50% for 9 months, and PAT up 60% for the 9-month. What's the sustainable run rate for the next year, see?
Morning, Lata. So what we map our business clearly is we keep the data growth as a proxy. We see what's the data growth happening globally, what's the data growth happening in the markets that we deal with, and how that translates into fiber growth, which then translates into the order book, the revenues, the margins for us. And we are seeing consistently that going up. If at a global level, there is a supply constraint for fiber for 2018 and parts of 2019 as well. So we foresee that this sort of consistency of growth should continue. And that's reflected in our order book as well. So right now our order book is at about 4,600 crores on a run rate of about 3,600 crores revenue that we are doing.
Okay. So therefore, I mean, how should we take it? 25% is possible next year because your order book is 25% higher than your revenue run rate.
I believe so. I mean, if we
could draw that conclusion.
We could draw that conclusion. Yeah, you're right.
Okay. What is the order book? Can you give us a little more details on this 4,600 crore order book? Where are the fresh orders coming in from, and what does the order visibility look like?
Yeah, about 3,300 crores out of this order book is the products order book, and about 1,300 is the services and software that we do. Out of the total 4,600 crores, almost 3,000 crores is a international order book for us, which is largely Europe, largely China, some Latin America and Middle East as well.
So margins at 22 is sustainable, or can it be bettered?
It will be in this range, Lata, because we have 4 distinct businesses. We have fiber, we have cable, we have services and software, and each have different margin profiles. Okay. So the absolute margin will be going up. How that fares in percentages will depend on the mix.
Fair point. Thank you very much, Anand, for joining us with your numbers today and that fairly optimistic commentary that order book is 25% higher than the capacity to produce. So a revenue run rate of 25 and an EBITDA margin at 22 or 23 thereabouts seems sustainable. That's exactly what investors may want to hear.
Okay, and let's find out what foreign investors are doing with the Indian markets at record highs.